Welcome to This Explainer. Look, today we're stepping away from the usual highlight reels of effortless trading victories you see all over the place. Instead, we're taking a calm, analytical, and totally transparent look at a system under heavy fire. We are documenting a true stress test in the wild world of foreign exchange markets. This is GoldMining Elite Week 25. The markets, well, they unleashed a historic wave of volatility this week, and we're going to break down exactly how a systematic strategy reacts when the pressure hits absolute critical mass.
Okay, let's establish our baseline right out of the gate. What we're looking at here is the live command center for GoldMining Elite. I want to be super clear. This is not a simulation. This is a live cent account, specifically MT5 account 373-11764, operating as a live, public copy trading signal directly on RoboForex. Our focus here, complete transparency. We're documenting real money exposed to real, unfiltered market conditions. By taking this documentary-style approach, we get to see the actual reality of systematic trading. Both the impressive progress and the really intense pressure.
Okay, let's dive into this. On the surface, the headline metric remains undeniably strong. Since launch, the GoldMining Elite signal has achieved an impressive total overall growth of positive 79.72%. That is a massive milestone. It pushes the account significantly forward. In normal circumstances, this would be the whole story. But in systematic trading, a high growth percentage is really only half of the equation. To truly understand a strategy, you have to look at what it costs to achieve that growth in terms of risk and exposure.
And that brings us to the harsh reality. Take a look at that metric circled in red right there. This week, the system experienced a staggering 63.51% maximum drawdown. That represents an incredibly intense period of equity pressure. This right here is a true stress test. For anyone studying automated trading, this is where the real learning happens. We're definitely not hiding from this number, we're going to dissect it. We need to figure out exactly what market forces conspire to push the strategy into such a deep level of floating drawdown.
So, what caused this? Well, this massive drawdown certainly didn't happen in a vacuum. It was driven by some historic macroeconomic crossfire. Central bank decisions just completely dominated the FX markets this week. First off, the U.S. Federal Reserve held rates steady, which aggressively shifted U.S. dollar sentiment. But the real shockwave? That came from Asia. The Bank of Japan actually raised interest rates to 1%. That's a decades-high milestone that caught a lot of people off guard. Market participants were forced to rapidly adjust their expectations for future rate paths. And honestly, the result was just extreme volatility across all the major currency pairs.
The absolutely crucial point here is how these macro events physically manifested on the charts. If we look at the EURUSD 15-minute chart, you can't deny that steep structural downward reaction. As USD sentiment shifted violently, the algorithmic strategy, which was busily building a basket of positions indicated by those red and blue arrows, suddenly found itself fighting a relentless one-directional trend. When a market moves this sharply without any meaningful pullbacks, it just puts immense pressure on a grid or basket-style trading system.
And this brilliantly illustrates the other side of the battlefield, which was honestly even more volatile. Remember that historic rate hike from the Bank of Japan we just talked about? Well, it triggered the explosive upward spike you're seeing on the USDJPY pair right now. Just look at the absolute verticality of the price action on the right side. It's wild. For a strategy that's managing open positions, a sudden, violent movement of this magnitude immediately squeezes equity. It rapidly expands the floating loss. This price action alone accounts for a really significant chunk of the extreme pressure we saw this week.
So, what does this all mean? To properly interpret this stress test, we need to calmly define a very critical structural difference in trading: realized balance versus floating equity pressure. Think of your balance as your secured, realized cash in the bank. It only changes when a trade is officially closed. Equity, on the other hand, well, that's your balance minus any open, floating losses or drawdowns. The whole story of Week 25 boils down to the intense divergence between these two metrics. For anyone deploying capital, understanding this difference is literally what separates panic selling from trusting the system. The algorithm was fighting hard to secure balance, while the open positions were creating this massive drag on the equity. Now, what's truly fascinating is the behavior of that blue line right there, which represents the account balance. Despite all the utter chaos of the central bank announcements and those massive chart spikes we just looked at, the realized balance continued its steady upward climb. It's actually amazing. By the end of the week, the balance reached approximately 44,943 cents, which translates to roughly 449 US dollars. The system didn't freeze up in the panic, it just kept executing its programming, successfully closing out profitable cycles to secure actual cash into the account.
But you have to contrast that steady blue balance with the plunging purple equity line. This right here visualizes that massive divergence we're analyzing. As market volatility exploded, the temporary floating drawdown plunged right along with it. At its absolute lowest point, you can clearly see the massive gap between the secured balance and the available equity. It's a stark, undeniable visual of what a 63% equity pressure scenario actually looks like in real time. I mean, it is the textbook definition of a stress test.
So how exactly does a strategy survive this level of divergence without just completely collapsing? The primary defense mechanism here is diversified asset allocation. The exposure isn't just tied to a single currency, it's spread out across 4 major pairs. We're looking at EURUSD taking up about 33%, USDJPY at 32%, USDCHF at roughly 21%, and USDCAD sitting at 12%. When the Japanese yen essentially went rogue, the algorithm relied on those other pairs to keep generating micro profits to support the account's margin. In this game, diversification is your armor.
And we can actually see that armor working in the MetaTrader 5 history. Even while nursing those massive open drawdowns under heavy fire, the systematic basket trading algorithm successfully closed positions. If you look at the ledger, it reveals small, continuous wins across EURUSD, USDJPY, and USDCAD. Together, these secured approximately positive 336 cents in realized profit for the week. It's a real testament to the fact that realized profits can actually continue to accumulate even while open positions are creating intense, temporary equity pressure.
Now, for those of you watching this explainer and wanting to verify the data for yourselves, this QR code right here provides direct access. Go ahead, you can scan it with your phone camera right now. It'll instantly take you straight to the live signal page. From there, you can follow the account's ongoing progression, verify its recovery from this drawdown, and, if you choose to, even copy the trades using RoboForex's proportional mode. Real transparency means giving you the tools to audit the performance long after this explainer is over.
Ultimately, what you should take away from this is that temporary drawdown is a totally normal, expected component of systematic basket trading. Markets are dynamic, and algorithms are absolutely going to face stress tests like this. We don't try to hide the pressure, we document it honestly, zero hype. We survived week 25, but the market never sleeps. With the Fed and BOJ drawing new lines in the sand, it really makes you wonder, is this week's survival proof of an unbreakable system, or is it just the calm before an even bigger storm? Real accounts, real risk, real results. Thanks for joining me on this deep dive.